Hello. Malcolm? Hi, I can't hear you. You are muted. We need to unmute in the bottom.
Can you hear me now?
Yes.
Hi,
Awesome. Hi, how are you?
Good, good. Thank you so much for this opportunity to be with you.
Awesome. I'm looking forward to all the good information that we're going to give everyone on what's happening in our market here in our area in South Florida. And
Great.
I'm excited to have you here. Thank you so much for being my special guest, and I can't wait to hear what you have to tell us.
Thank you so much. I'm very honored.
Yes, definitely. So I'm going to share my screen, and I'm gonna start right now. Hold on one sec. Right here. Let me just go. 1 second. Let me do this again. No. No. Can you see me? Okay, now let me try it again. Share screen. Okay, there we go. Let me know if you see it.
Yes, definitely. I can see it now.
Awesome.
Guys, it always happens in live television, so it's normal.
It is. All right. So we're gonna start the home buying presentation. This is sweet and juicy information for people that are thinking about buying, people that are renting, people that are tired of renting, people that don't know how to get out of that situation and are thinking about changing their lives and taking it to the next level. So we're going to show you what's possible for you, and we're going to give you tools and advice to help you feel at home while buying one. So you might be asking yourself, am I ready to buy? So if you're ready to buy, you should be able to tell yourself, I'm better off buying than renting, and I understand the cost of home ownership. I am financially stable, and I understand how my credit score affects my ability to buy. So if you are better off buying than renting, you might say, am I better off buying than renting? And the answer is yes. Yes. I can't, there are some people that say, oh, it's better renting than buying because of the expenses that homeownership brings. However, I am a strong opponent to that. And I know because I have lived this in my own skin, and I know the benefits of homeownership, what homeownership brings to everyone. And I've experienced it myself, and my goal is to share it with everyone who might be thinking about doing this. So what's the cost of homeownership? Here, I'm going to tell you what you need in order to buy. So whenever you're ready to buy a house, let's say we already found your home, you need to put a down payment. When you put a down payment, you also have to pay for your home appraisal. The home appraisal is a professional analysis of the market value of the property that you want to buy. And that also has a cost of $500 to $750. Your down payment, I'm going to go a step backwards. Your down payment here, that depends on how money you have in savings and how much you can put down, and depending on the loan that you're getting. So Malcolm is going to help us with that. He's going to talk about the type of loans that we have in that the banks offer in a little bit. So then after that, we get the home appraisal. Then you're going to have to do the home inspection, which is a detailed report on the condition of the house, highlighting any significant problems that might affect the property's value. And that costs between $350 to $650. And that includes your termite inspection, which is an evaluation of the pest damage, origination fees, which are fees assessed by the bank to cover the processing of the loan and administrative costs, closing costs, which are bank fees and third-party vendor fees that may include, but are not limited to, attorney's fees, settlement fees, title insurance, recording fees, and appraisal fees, and also your moving costs. So here, I'm gonna ask Malcolm now to talk a little bit about the down payment part, also the origination fees, and some of the closing costs.
All right, so down payment. Let's start with that first. We have different programs. For example, if we do FHA, requires 3.5% from the sales price. We also have a conventional, which requires 3%. Listen to this. This is very important. 3% if you are first-time home buyer. So you can qualify for 3% down on a conventional. And it's, of course, you need to have a certain credit score for that to be being able to qualify, okay? So we also have a 5% down. We also can do any down payment from conventional. You can do 5, you can do 7, you can do 20. And then if you don't do anything below 20% off requires mortgage insurance, okay? Now, the other programs that we have is we have a USDA loan, which requires 0% down. What is the USDA? It's a program that is for rural areas. For example, there's some ranches, there's some areas, for example, like if you look into the Southwest Florida side, they are parts that qualify for that program. If you guys need, we can provide you the link so you guys can choose the property, or if you know the address, so you can look it up if to see if the property qualifies for the USDA. Also, as you guys are in Broward, Ave Maria in the Collier County qualifies for USDA, 0% down. Now, when we talk about the origination fee, what's origination fee? Every institution, financial institution, bank, credit union, they charge origination fees, which is pays for the cost of the loan, for how much the loan is gonna cost, okay? So it's all depending on the loan amount. I don't wanna go in details with that. When I do have a client, so I explain that after we have a loan amount, sales price, I will do the breakdown with them and explain them how much there will be the origination fee for that part, okay? Closing costs. As you see over here, it's a lot of information over here, but here's a great thing about this. So if you're purchasing a property, you can ask Claudia to get seller credit towards your closing costs, meaning the seller is gonna pay your closing costs, which is something really great that in this market we can do, okay? So for example, if you wanna do, if the seller is gonna pay your closing costs for FHA loans, 3.5, I'm lying, 6%, sorry about that. 6% is the highest from the sales price, is the maximum that you can get from seller credit. If you're doing conventional, it's 3%. And if you're doing VA loans, it's 4%. So, you know, those things that we always have to consider on the table, because realistically, is that I like to get less money from your pocket, okay? So, and also the closing costs include third-party fees, which are the escrows. You have to pay title. You have to pay also the government, of course, or recording fees, etc. Things like we all have to do, okay?
Okay, that's
Any
great.
questions on that, Claudia?
Yeah, so FHA is 6% that the
Correct.
seller. Okay, that's great information. And then you said 0 down payment for what program was that?
USDA.
Okay, that program I need to learn more about. So can you give me a little bit of overview of
Yes, USDA loans, they have a requirement because it's another government loan. So they help the clients to get the property with 0% down. So the debt to income, there has a certain numbers that you have to meet. Also, it's income limits. So it goes by household. So it goes depending on the county that you guys are living. For example, and if I'm not mistaken, here in this area for USDA is for single person is 103, if I'm not mistaken. But you know, you guys, if you need any questions at the end of this webinar, I will have my information. I can provide that information depending or in your zip code, city, if you want to get a little bit more. Also, the minimum credit required, if I'm not mistaken, is 640, if I'm not mistaken. But
Okay.
I can check that out. This program, for example, like we do most of the time, but because I have a certain guidelines with it, it's sometimes depending with this interest, it's a little sometimes complicated to get the clients approved with that. But most of the time what we do is like the regular conventional, which is great at the end of the day. And then also we have a down payment assistance. I'm gonna go later on and I talk about that. This is something is really great too as well.
That's great information. I can't wait to get to that part. Okay, so next question is, how does my credit score affect my ability to buy? So this is a great question to ask yourself. So when you apply for a mortgage loan, the bank collects as much information about your finances as possible and decides whether lending you money is a good risk. Banks will use your credit score to help evaluate whether you are likely to pay back your loan. So a higher score can mean two things: a better chance of getting a loan and a lower interest rate on your loan. So Malcolm can talk to us about this better than I can.
Yeah, so when we talk about the, sorry, Claudia, when we talk about the credit, of course, like as you see in the chart on the presentation, excellent is about 781 and then above. Good credit, 780, 720, etc. Regardless, don't worry about your credit. If you think your credit is not good at all, you always have to contact a specialist, like in this case, myself, so I can look into your credit. There's so many tools that we can use to bump your credit if it's not the minimum requirement. For FHA loans, the minimum required is 580 credit score. But listen to this, with 3.5% down. Now, if your credit score is less than 580, we can still go in your loan with 500 as the minimum with 10% down FHA, which is great news. Some people, they have the money for the down payment, but the credit is very low, but we definitely can help you out to get there, to get the home that you're looking for. And also, like I said, we have a tools that we can use in order to help you out to get your credit in the way that you want it, or pay certain debts here and there. And then it's a guidance that can tell you exactly how long your credit can be in the certain number that we're looking for.
Right, this is amazing. And it's also crazy at the same time because many people might not buy because they think that their credit scores are too low. Wow, that's amazing information. Good to know. Okay, moving forward, improving your credit score. So what do we do to improve credit scores? So here we're going to give you some bullet points that is going to help you. It's free information, so take advantage as much as you can and start working on this, because it's going to help you, even though you can qualify with a credit score as low as 500, as we just learned. A higher credit score is going to bring an interest rate lower for your payments to be lower as well, your monthly payments. So pay your bills on time. Sounds simple enough, but if you have trouble remembering this task, consider setting it up in an email, put it in a calendar, a reminder, and with your creditors or automatic bill payments. Pay at least the minimum on your credit card bill, and I would pay more if you can. A higher is better. The rule of thumb here, Malcolm, is to have the debts down to what, it's 20%, right? And 20%, right? So keep your existing credit cards accounts with a zero balance open. So what do you have to say about this? Don't close these accounts. Having available credit lessens your credit risk, and closing the accounts could decrease your score. Is that right?
Yes, you can never, ever close an account. Even with a zero, you're never going to use it. Do the best thing you can do. Grab the card, cut it in half, and that's it. You forget about that card, because that's history.
That's history. Correct errors on your credit report. Look for things like incorrectly listed late payments. Contact the 3 credit reporting agencies if you see discrepancies. And also Malcolm has people that can help you with bringing your credit higher if you need help with that as well. Reduce your debt. Create a plan to pay off your highest interest rate debts first, while maintaining minimum payments on your other accounts. And you may want to get help from a credit counseling service. So what do you have to say about this?
What I have to say about that, it's very interesting. And this part, there's so many ways how you can do this. For example, you have a credit card that is $1,000 limit, and you owe in that card $950. So here's the thing. You can really easily call the credit card company and they ask for bigger loan amount, loan amount, or bigger credit card, how you call it, like the spending or a limit. So in that case, if they bump your credit, this is one way how to get your percentage of usage less. So if you do, for example, like if you have a credit card at $1,000 and then you owe $950, so probably we're looking into 99% of your credit usage. So that probably can affect your credit. So the best way how to do it is to get the credit card company and they get that line up to higher than that. Second thing, people don't know this. Get Credit Karma is one of the great tools and free to get your credit going. Also, they gave you, based on your credit, based on your information, they gave you some tips. For example, how to get rid of those credit cards that is balance transfers. So they gave you the best ideal card. Always look for it for no fees or annual fees. So basically, you're looking for those things in the time of period that you're not gonna have no interest. So that's the way how that card is gonna purchase this other card that you have on debt, and then you're gonna be paying no interest, just capital or the principal on that. So in no time, you're gonna be able to get rid of that card and then just save it. And then if, let's say, for example, you have an amount of maybe $1,000 from it, and then in 12 months, you were not able to pay that off. So you can get another one to buying this $1,000, and you continue doing that. So you will be debt free in no time. I'm experienced with that. I have a lot of credit card debts in the past, and now I'm zero.
Wow, and you did it using the advice from Credit Karma?
Yes, I use the Credit Karma, and then I use the balance transfer to get rid of all my credit cards.
Wow, that's a great tip. I always get the suggestions from Credit Karma, but I never know that was the best thing to do. I'm like, That looks sketchy, but you know, now that you're saying it, I'm going to I'm going to start doing that. All right, next question would be, how much home can I afford? So the amount you can afford to pay for a home will depend on how much you're qualified to borrow, which is based on, you'll hear different advice on what you can afford to borrowing, depending on who you ask. But a good rule of thumb is to keep these limits. So one, your payment history, your credit score. The higher your credit score, the better chance you have of getting a loan and obtaining a lower interest rate. However, we've just learned that you can get a loan with as low as 500. I don't know if I should make like advertise this, Malcolm. Is it, can I?
Yeah, absolutely, absolutely. It's a great, people don't know about this. And then, you know, sometimes I'm gonna tell you something like from the past. Not always I have a 800 or 700 credit score. You know, we're all humans. We don't know how to do that. They don't teach us in America how to get our credit like great. They don't give us classes for it. So we learn in our way. And then I was afraid, because I knew my credit was not good at all. I was afraid to get a loan because I knew my credit was bad. You know, when finally I was able to get the step to see if you're qualified, yeah, my credit was 600. It was not bad compared to what I thought it would be. And then I was able to afford a home. And then, you know, like the specialists, like loan officers, they're able to put things together and they create a plan. Maybe you don't qualify right now, but probably in a couple months, you will be able to do that. Just remember, we are here to give you the tools in order to prepare you when the time comes to purchase. If you don't qualify in a moment, I never say you don't qualify. I say you're going to be qualifying in this period of time following this guidance.
Right. Wow. Okay, awesome. Then I'm gonna start advertising it.
Yeah.
Maybe you can send me a spreadsheet or something that I can
Yeah,
start.
we do. Definitely.
Yeah, definitely. In our next virtual presentation, I'm going to talk about that even more. Your ability to pay would be the other thing you have to do. The portion of your monthly income that will be devoted to your house payment and other debt, the market value of your home. Your home will be valued based on an appraisal, and 36% goes to pay debts. So this part, I'm going to leave it to you. Malcolm, in the percentage part, how does the bank do the ratios on a person that is applying for a loan?
But actually, this is pretty accurate. So I would say probably like, you know, when you go in to see a specialist and a doctor, they told you about like all these macrochondromas and things like that. So I'm gonna simplify it in 2 words. So debt to income is all your debts divided by your monthly income. So this is pretty much as simple as something that we use. And then in that part, sometimes your ratios are too high that we're looking for. I don't want to just get you guys like all crazy and all these numbers. This is something that we do and we help you out to get there. Let's say, for example, your ratios are too high. If you're doing an FHA, I can probably do with 57, 58 ratios, okay? So debt to income. And then if you have maybe like an 80%, I can probably get a cosigner for you to help you out. In so many cases, like we can add a spouse to it, they help us out a little bit to get approved into this. So there are so many ways. Or the most important thing, let's say you have money aside and I can look it up in your credit and I can see if you have like debts or credit cards that need to be paid. As we know, we have credit cards, they are, some of them, they have highest interest rates. So those are the ones we need to get rid of it. Let's say, for example, like we qualifying for a loan, so-and-so, but we need to pay certain debts and you have the money for it. You don't have to pay that right now. So you can pay that closing. And then if you have the funds for it, so we can make you qualify. So we do things around in order to help you. Just remember this, loan officers, as me, we are like lawyers. We are here to defend you from the judge. present your case to the judge. It's basically the judge is the underwriter. So we have to sell your loan to the underwriters. When the underwriters see it, follows into the guidelines, and we're here to help you from the beginning until the end and make sure this transaction is going to work and you will have you forever home.
No, that's a very good topic to talk about, the underwriter part. And I've always been, I always felt like the twilight zone whenever, the file goes sent to the underwriter and we're all waiting. Everything is, what are the conditions on, of the underwriter? What are the underwriting conditions? And this part is like, okay, so where is the underwriter? This is hard work.
Well, remember, guys, every time we do pre-approval, we play as underwriters too as well. So we oversee everything that is in your credit, everything that is in your finances. So again, like I said, if it's something that's not disclosed, don't hesitate to let us know. This is what's happening. This is what I have. This is this and that, because we need to have everything sorted out, because later on things are popped and maybe you won't be able to qualify if it's not disclosed in the beginning. So feel free, always tell us the truth and tell everything as it is, because like I said, we're here to help you out to get this deal closed.
Yeah, definitely. Great suggestion. So next question, how should I determine my down payment? So a down payment is the money you pay toward the cost of the house when you first buy it. So you borrow the rest from the bank as a mortgage. The day after you close on your house, your down payment becomes the equity you have in your home. You have several down payment options, including 20%, which is one of the more conservative options banks may use, equals 20% of the home purchase price. The next one is 3 to 5%, may be available for some government loans and some conventional loans, and 0%, some types of loans, including VA, may not require a down payment. And now we learned that USDA loan, right?
Yes, and I'm going to tell you a secret. Don't tell anybody.
Okay.
So do you know that you can get a duplex with 3%, 3.5% down FHA?
Really?
Yeah. So basically it's simple. We do the pre-approval, same as regular pre-approval, and then we use this one side of the duplex to rent that out, and they help you out to qualify too as well. Now, if that property you want to buy, let's say, for example, with conventional, or it's not going to be your primary or things like that, of course, we have to do with 25% down, okay? Investment properties are 20% and duplex are 25%. But hey, 3.5% down for a primary residence is a big deal.
Yes, it is. Now, the one thing that I want to mention here is also, like, people need to be realistic of what type of home they're going to be able to buy with what they can afford, So a lot of people, as their first time home, they might want to get, like a mansion or a castle for $350,000 or $400,000, which is actually not realistic. Because right now, 365,000, I believe it's the national medium home value in single family homes. So that means that home is not gonna be like a new construction home, because right now new construction homes range in the starting in the 500 up to $1 million homes. So $350,000 to $400,000 is not going to get you, might not get you a new construction in a single family home, maybe in a townhome, maybe in a condo, but not in a single family home. So that's a very important part on being realistic as well. Down payment. If you're like most people, the down payment on your house will likely be one of the biggest cash investments that you'll make. And there are a number of ways that you can get that amount of cash together. So first will be savings, right? Buyers often save regularly for years by reducing expenses, taking a second job, or getting a smaller apartment if they are renting. A gift. So here, what type of gift can a buyer get or would be approved to receive when buying and putting that as a down payment?
So you can receive always a gift from a family member. So from a spouse, you can do from your son, your father. So anybody that is a family member can give you this gift. Like, for example, if so-and-so is like your, I don't know, not your family, so it's, it's not a family member. I got these questions all the time, like people coming to me and they're like, oh, my neighbor is gonna just give me a gift. I'm like, oh, come on, guys. Your neighbor is not gonna give you $20,000 to your loan for you. It's something going on there, but family members, of course, like they're able to help you out. Also, we have a gift of equity too. So those things, depending on the program that you're choosing, so I can guide you like a little bit more from that. Normally the gift equity goes when you purchase in a home from your parents. For example, like I live in my parents' house and they're selling that house to me, so they can, the equity, so they can give it to me as a gift. So many options in financing, believe it or not, it's like, this is like a puzzle. So we put all things together and we make that work. So we have a solutions for every single case.
Right. So now you're making it sound as if it's actually hard not to qualify.
Oh, it's simple. It's very, very simple. It's very simple. So with the down payment, if you get, for example, like if you don't have the money, but you have like a family member that can give you the money, so it's like, it's a go. Because normally when, like I was mentioning before, if you get the down payment or the gift from a neighbor, you know that you have to repay that money. So a neighbor doesn't give you money for free. So you have to repay that. And per guidelines, there has to be no repayment for the gift, regardless. So that is one option. And then I was mentioning before, gift of equity. This is another way how we can do that. Every case is different. I was like recently with someone that was again with a neighbor, and the neighbor wants to give the some money, etc. And then of course it's not related. They don't have anything in common. They have, but we were able to get with the grandma. So grandma, she was able to get that gift. And then also, even, just remember this, even when we have a contract and we have all the stipulations, we were able to negotiate the seller credit. Even at the beginning, we didn't have any of that. So there are so many options, even when you have like already executed contract. So, as a real estate agent, you guys know that you always can negotiate with that.
Yeah. Wow. That's great. The next thing would be on top of the gifts, which I know it has to be, it's, how do you call it? It's primary family member, because could it be before I go to the next point, could it be on the gift part, the gift come from a cousin?
We have to look it up in those things when we get into that. Again, it's guidelines are things that are changing constantly. And then probably right now it's just a regular directly family members, but later on we can, they can be accepted by third-party member, but still we can look into it.
Okay, awesome. Next thing, special programs. And that's something that we're going to talk about. I cannot wait to hear what you have to say about the special program that you are bringing to us this evening. So tell us a little bit about that.
All right, so our company, Maxwell Mortgage, We are being very successful with this program that our Governor DeSantis, he just launched last year, the Hometown Hero programs. Before that was a grant, a bond is called, up to $25,000 for first responders, people in the medical field, etc. They used to have like a big line of occupations, but just guess what? It's starting on July 1st, but it's going to be effective in July 3rd because it's a Monday. July 1st, if I'm not mistaken, is Saturday. So this program is going to be launched on the July 3rd. So meaning everybody, listen to this, every single person who lives in Florida qualifies for this program if you are based in the state of Florida. Couple things. For example, what if I work for a company? Let's say I work for the bank, ABCD Bank, and the headquarters are in Ohio. Do I qualify or not? Yes. As long as I have physical branch or office in Florida, yes, I qualify. What about if I work remote and my headquarters are in California? So if you don't have any physical office in the state of Florida, unfortunately, you don't qualify for that. What about if you are self-employed? If you are self-employed on the state of Florida, yes, you qualify. If you file taxes in Florida, yes, you qualify. So this is a great thing. Minimum credit score for this program is 640. Couple things on that.
I'm going to bring my charger because I don't want my computer to die. Keep talking. I'll be back.
All right. So it's even better. So it's, like I said, it's available anywhere in the state of Florida. Can be used with FHA, VA, USDA, and conventional loans. FHA loan, 3.5%. VA, you can do with 0, and then use that money for closing costs. We help a lot of clients, and then they have their home, forever home, with pretty much nothing coming up from their pocket. So we can do the USDA loan, same thing with 100% finance. And then conventional loans, we can do with 5%. So this program is up to $35,000. So before it used to be only 25. Couple requirements. I was mentioning before, 640 credit score, that's the minimum. Second thing, must not have owned a home in the last 3 years. What that means. So some people, they own a home maybe like 5 years ago, and then they sold, and then it's in a different state, etc. So now they can buy. But what happened if you just sold your house in 2021 and we are in 2023? So we have to check the time of the sale of the house until when you're going to purchase. If that time frame is 3 years or more, you qualify for first-time home buyer for this program. If it's not, so we have to probably wait a little bit, so you don't qualify for this. Veterans, they don't have remember there's no homeowners restrictions. So this is another thing for the veterans. For example, this guy, he owns a home in New Jersey, and then he's moving to Florida. So he can have his house here because he's going to be his primary. So we can use that for a veteran using a VA loan. So basically a couple things on that. They have income limits per city or per county. For example, in this county, I'm just going to throw in there, in this county, the income limit for Lee County, Fort Myers, Cape Coral, Bonita Springs is $128,000 250. It's not household income. It's only an income for the applicants who they're going to be on the application. It's called 10 of 3, which is like if it's 2 people on the loan, so the 2 people combine it, they have to make 128,250. They cannot pass by 1 penny. Okay. So Collier County is $149,000 and $700. And then I can look it up. It's really quick for you guys. And Broward, it's really, really simple. Give me 2 seconds. I have it over here. Dun, dun, dun. All right, there you go. Let's open it.
Okay.
So Broward County, 144,000. That's the income limit. If you guys are in Dade, let's see, Dade County, Dade. Collier, Dixie, Duval,
Dade and
Monasterio.
Palm Beach.
I'm sorry?
Dade and Palm Beach.
Palm Beach, 146,100. So 146,100.
Okay.
And then also like for my friends in Sarasota, 137,100. Let's see, what else? Orange County, Orlando, 131,700. Miami-Dade, there you go, 154,800. So I mean, I have this income limits. I can send it to you guys if you guys request me all the information, or I can provide directly to Claudia, and then we can send that to you guys. And then we're always available to answer all type of questions that you have for us. Something else that you need to know about this program. We don't know yet if this program for how long is gonna run. Because again, this is a bond for the state of Florida. And then as soon as you get pre-approved, get pre-approved first, and then we can see if you qualify for this, because you have to reserve those funds once you have a contract in order to get this money. Important. This program is unforgivable. So meaning that if you paid off the house, you refinance, or you sell the property, you have to return these funds they're giving to you. So it's this amount of money is never going to be forgivable, has 0 interest in it. But unfortunately, like if you don't do it, I mean, if you do any of those 3 things, so you have to return the money. Also important, interest rates are great, better than FHA or regular conventional with no points. So as far as right now, we don't have the interest on these programs yet, because they're going to be launched on the July the 3rd, probably the 1st. We're going to have everything else and then all the guidelines. But so far, as I seen it last year and the couple months ago that we did like a few loans for Hometown Heroes, the interest rate, they were great. And the people that are able to qualify for this because they were in the 6.25 with 0 points just directly. So this is really, really great.
Right. So it means that, let's say someone qualifies for this, $35,000 that can pay for the whole down payment.
Correct.
And plus closing.
Plus closing costs is up to 35,000. So how's the calculation go? So I'm gonna give you like just I'm gonna grab my calculator.
Okay.
So let's say, for example, you guys looking for 300,000 home. I like to do even numbers. The $300,000 by 95% is 285,000 even. By 5%, you will get for $300,000, you will get $14,250. This is what they were given to you. So regardless, you can do 3.5 down FHA, and they use the other 1.5 that is left towards your closing costs. This is something that you can do if you qualify for FHA. So if you want to go that route, so it's welcome, or you can go directly with conventional. This is a great program. We help so many families, and then make that possible. And like, again, thank you for our governor that he was able to sign up on this program. So many families, they can have a home right now. And I want you guys have one too.
Yeah, it's amazing. So what if, I have a question, what if someone owns a home, is moving with you know, their husband or wife that they don't own a home? Would this apply or not to them?
So per guidelines, the other person has, if the two of them, they move as a primary, they don't qualify. Regardless, even if it's one is on, doesn't have a property and the other one has a home. So probably we can do is a cosigner non-occupant. We have to check the guidelines as soon as we have available, so we can see if we can qualify like that. In the other program, you were able to get a cosigner, the person having a home, but the primary person who's going to occupy the property didn't have no home. So that is primary for him or her, and the cosigner non-occupant is the other person who helped them out with the income. But both income combined, they have to meet the income limits per county.
Okay, got it. Awesome, amazing information. Okay, here, how much can I borrow? This is the pre-qualification part. So here we're gonna tell you how to get pre-qualified or know around how much you can afford to buy, right, on a home. So here, Malcolm, he will set your budget based on where you are in the home buying process. You're going to get pre-qualified for your mortgage if you're thinking about buying a home but are just getting started and want to get a same-day estimate of your home buying budget. A pre-qualification is simply an estimate of how much you can borrow based on information you provide. So the lender here will ask for basic financial information in regards to your income, debt, savings, and assets, and may also check your credit. You will receive a pre-qualification letter, not a loan agreement, which summarizes what you may qualify for if you apply with us or with Malcolm.
Important, let me tell you.
Yeah.
As you guys see, like I like to talk. I talk all day long.
I know.
I want to give you a heads up. I know Cecilia or Claudia since she was little. Believe it or not, we just came to America, and then one day we just crossed our phones, and then I didn't get her name because I know her by Cecilia. So she told me she was Claudia, and we kept talking, and I was like, wait a second, are you, you know, this is funny. Regardless, when it comes to credit, guys, don't get scared for getting your credit run. When I do the credit pull, I do a soft pull, which means you're not gonna have any inquiries or hard inquiries in your credit. So they gave us an idea how your credit is. The only time we're going to run a hard pull is when we have a contract in hand and able to submit the loan for processing. That's the only time we're gonna run your credit. We're not like some other lenders that they run the credit left and right, and you start with 700, and after applying with so many people, like your credit now is like 620. So this is not happening with us, okay? So just giving you a heads up. So we always do a soft because it's not required to get a hard pull if you are in the pre-approval process.
Okay, good to know, good to know. And if they don't qualify, you give the prospect, the client, the applicant steps on what to do to qualify, correct?
Correct. So I give you, like, summarize things they need to get in order to get the approved for the loan, what they're seeking, as far as a credit, how much a credit needs to be, the guidance to how to reach that credit that we're looking for. Income-wise, we can tell you exactly how much we need. Let's say, for example, you make $50,000 and to qualify for a certain amount of money, so you need $60,000. So we need to find $10,000 that somebody can make $10,000 to qualify for this loan. So we give you some little ideas, little scenarios. So everything is possible. And then also don't get scared, because we can get like cosigner non-occupant. For example, your parents, they own a home, but they want to help you out with the credit for now, because things are not bad for all the time and forever. And then they can help you out to cosign this property that you're going to purchase, and then they're going to be cosigner non-occupant, and they can help you up until that. And later on, you can refinance and take them out of the loan and be in your own, because that life moves around, and right now you're making this amount of money, and of course tomorrow you're going to make even more.
Yeah, I love that analogy. I love that. Okay, so how do I find the right real estate agent? Now you may think, now that we have the lender. So a good real estate agent is your partner in the home buying process. You may be working with them for several months. So it's important to find someone with whom you're totally comfortable. As a buyer, you don't pay any commissions. This is something that not everybody knows. So as your agent, as your buyer's agent, you will not pay me a commission. I am free to work with you and to help you find your home. So it's in your best interest to find an agent you trust before you start looking to purchase, right?
Absolutely. And then guys, when you see sometimes sell by owner properties, and then you want to get into that, and then whoever is going to make the contract for you. And then I know like that many of you don't have no clue, no idea what is a contract. And then always hiring a realtor, it's a great idea. They're representing you, they're in your behalf. They're going to make sure like this transaction is going to be great for you. Also, they're going to set it up, the terms, they're going to revise the whole agreement. Once you get in the contract, it's done. So you already sign it. And then you need to have a certain things, as Claudia knows, financial contingency. If you're going to get a loan for that, you need to have a financial contingency. I've seen it, like people, they don't put financial contingency in it. What happened if the loan doesn't get approved, or something happened with you in the future later on, and then you won't be able to recover the money that you put on deposit and escrow. Some people, they put $50,000, $70,000 to escrow, $10,000, whatever money is money is money. It's hard to save $1,000 in these days. So why giving that away if you don't have something set up from the day one? Same thing with the inspection. What happened if the home that you loved and everything is like termites all over, or is in really bad conditions? Because the inspectors are the ones that tell you how much if the property is really worth it, or what the things that needs to be done. And then kind of like a good inspector, he will tell you this fix is going to be around a certain amount of money, is something that you have. And then that's why you have inspection period. And then some people, they don't put that in there. And then, it's like everything. So we have a great salesman, bad salesman. We have a great doctors, bad doctors. And then, if you do that by your own, it's always good to get a real estate agent.
Mm-hmm. And this to us is like this language that we're using, it's second nature to us, because we have been doing this for a long time. And for you, some of the terms that we're using might be new and you might not understand. And that's why we're here to guide you and to protect you from A to Z, from the beginning to the end, until you get the keys of your home, making sure that all your, that you are protected, your assets are protected. We are protecting your benefits. And that's why we are here for. So here, understand the difference between agents. That's another thing that many people don't know. What's a buyer's agent and what's a seller's agent? So the buyer's agent works for you to help you buy the right house at the lowest price. And the seller's agent or listing agent works for the seller and helps the seller get the highest price and best terms for them. A buyer's agent will help you find a house you love, be knowledgeable about neighborhoods, pricing, local schools, and public safety, make your home search more efficient by narrowing down your choices based on your preferences, assisting you in negotiating a fair price, answering your questions and provide guidance, help you set a selling price for your current home. If you have one, determine the price of homes recently sold in your neighborhood. Use information on comparable homes to determine a selling price for your home. A seller's agent will help you set a selling price for your current home, determine the price of homes recently sold in your neighborhood, and use information on comparable homes to determine a selling price for your home. Now, here, this is what Malcolm was talking about. How do I negotiate and make an offer? Well, that's what or why we're here for, to help you in this step. Your initial offer should be based on prices of similar homes in the same neighborhood, which are called the comparable homes. Condition of the house is very important. So if it's very not taken care of, so it's, there's a lot of problems with the house where it's not looking good, not painted, it smells bad, things are falling off, the roof is old, the price is going to be low. If the home has been painted and it's clean, not so much remodeled, we're going to give it a medium price. And if the house is new construction or everything has been remodeled, new kitchen, new bathrooms, new roof, new AC, we're going to give it the top of the price on the market. What you can comfortably afford based on your pre-qualification. That's also that we're going to stay on your pre-qualification amount, and we're going to look on properties based on that price. The asking price may be too high if the house has been on the market for an extended period. The listing price has been dropped and prices of similar homes are much lower. Here, negotiating, making a fair offer. Your real estate agent will help you prepare your offer to the seller, telling them how much you're willing to pay. You can strengthen your offer by considering the concessions you've been willing to make. For example, you may be able to offer to close quickly if you have a pre-qualification. You can also strengthen your offer by negotiating after your initial offer, and the seller will likely come back with a counter offer, and you can work with your real estate agent with us to decide whether you can accept that offer or if you want to make a new offer. What do I do after my offer is accepted? Well, here is where Malcolm starts working with you. Your offer will be signed by the seller. You're going to complete your loan application. You're going to lock your interest rate. Right here, what are the interest rates on the market right now, Malcolm?
On the market, depending on the credit score, I seen it today. I did different pre-qualifications today, depending on credit scores. I have like a 6.5, I got 6.75, I got like 6.375. Also, and deficient credit score, I have like in the highest 7. So it's all depending on how credit goes. Market goes up and down. And guys, don't worry about interest rates right now. I'm gonna be honest. Marry the home. Don't marry the rates. I'm gonna tell you something my dad, he said. The opportunity to purchase is now. Tomorrow is too late. Because once you have a home right now, things are gonna happen later on. So interests are gonna drop. We know they're gonna drop the next year. So if the interest drop into 5% with some of the highest leads or people that they analyze the market, so they're telling us, so it's great. But just remember, once the interest they drop, prices prices and the properties are gonna go up. We're gonna have like a little bubble that we have in the past. So if you purchase a property right now and they consider highest rates, is later on you can refinance them. But remember, I've been doing this for a little while, and then we used to have back then interest of 9, 10%, 7%, which is that was normal. Unfortunately, because of COVID, we got spoiled with the 2s, with the 3s. So going back again, prices are, I totally get it. Prices are already like a little higher. And then, but you know, everything is possible right now. So later on, the interest drop, you can refinance your home and you can have like, you can save up to $300 a month when the interest drop.
Yeah. And what was I gonna tell you? So here, interest rate. So this 650, it's based on what credit score?
That was based on 700 credit score. 7%, that was based on 600, and if I'm not mistaken, 640, if I'm not wrong. We determine so many things when you do interest is about the value of the property, the program that you use. There's so many factors that it goes, you know, by hand. It's not necessarily only just specifically like the credit. It's the whole thing. That's why we need to get the application in order to get the right quote for you. Just remember this. Many people, they're going to offer you something, and I've seen it all the time. People and some other companies come to you and then, no, I'm going to offer 6%, come to me. And you know, so after you already work with some lender, you decide to go so and later on the things are totally different. When I'm about to lock the rate, oh, it's like 7.5. Yeah, but you told me, and they're about 15 days to close, and you have to do it no matter what. So yeah. I'm honest. When I do things in the right way, because I believe in karma. So what goes around comes around. And then again, I will quote you whatever it is, how the market is doing right now. And then we compete with Bank of America, one of the biggest industries in the banking system. So we are competing like all the time. And then sometimes you're gonna see like on the market on internet, some so-and-so, they're offering 6.2. I seen it's 5.5%. So, but they don't disclose how many points you're gonna pay to get that program or the interest.
Right. And now going back to what your dad said, that's 100% in with what he said. And I also heard Dave Ramsey, you know, he's a big financial guy. And he also works with real estate. So he said, buy whenever you are approved to buy. Buy if you are approved to buy now, buy now. Buy now. And because in a year, like you said, Malcolm, you don't know where you're going to be. You don't even know if you're going to have the same job. And it's better to buy now when you have that job that, you know, you might have 2 to 5 years already of history. And then next year, if, you know, you can change jobs, and who cares then? You will have your home right there. So there are a lot of things you can do after you buy your home. And one of the things that is going to happen to you is after you buy your home is your life is going to change for the better, because you're going to be in your own home. You're not going to be depending on that lease that's going to expire. And then you're not going to have to be looking for another rental. So you're going to be in a stable home that you can move out if you decide to either sell or rent and move to your second home, and, you know, with more money in your pocket. And so the other thing, after your offer is accepted, make your escrow deposit. And that's based also on the percentage of what you have agreed with your lender. Your realtor has to schedule your inspection also. So the escrow deposit, and you start doing your inspection right away, depending on the terms of the contract on your inspection. Here, lender, what is Malcolm doing to do as your lender? What's your lender going to do? He's going to schedule a home appraisal and order the title insurance, right?
Yes, I like to order the appraisal right away. The reason for, sometimes depending on the county, not right now, but before, they used to take like a little while, 2-3 weeks, because that was like a lot of demand on homes. And then right now the market adjusts. But still, I like to get the appraisal done already, because remember, if the property doesn't appraise, so you can negotiate the price again. Let's say you're buying a house for $300,000 and the price comes for 280. So here's another deal, so we can negotiate the price. So we're not anymore on the seller's market, we are in the buyer's market. So if the property doesn't appraise, of course, like we always can negotiate. And then if the client doesn't want or the seller doesn't want to negotiate, well, you can walk out of the deal, because you're still having financial contingency, meaning, so you have to pay the difference from your pocket in order to qualify, because the institution, the lender, is going to approve you only for $200,000 with the appraisal value is.
Mm-hmm. Yeah, definitely. We're going past the hour. We're about to finish here. What is your real estate agent going to do? I said it again before, schedule your home inspection, schedule your pest inspection. It goes hand in hand together at the same time. Here is the Heroes program that Malcolm has brought to us. So this is great news. You can get up to $35,000 as a down payment assistance. So here is Malcolm's information. If you are planning on buying your home, or if you want to know where you're at, and maybe in a year, if you get your ducks in a row, you might be able to be in your own home. So how would it feel to you to be in your own home 6 months from now, 3 months from now? Oh, one thing is that when we put an offer on a property, see yourself moved between, I would say, 30 to 45 days. That's what it takes. As soon as we find your home, that's what it takes from start to finish when your paperwork gets submitted into underwriting. Correct, Malcolm?
Yes, just guys, I like to always close earlier than what we schedule for. I like to get my clearer to close like on time, and then because I know how exciting it is. And believe it or not, when I've been in this industry for a little while, and then when it's your time, my time to purchase, and then I was so excited. So I want to close early. I used to call the lender, oh, come on, are we getting the clear to close? Yeah, but we're still 2 weeks away. I might, yeah, but I need it. And you really don't need it, but you really want it. So we're gonna make that happen for you. So we work with real estate agents as well. And then remember, me and the real estate agents are like, we partners who work. We're trying to make this deal very, very simple. I like to get all the conditions like very minimum. That's why on the beginning, when I request some documentation, so probably it sounds like a little tedious, a little high, a little much, but it's better to have that in the beginning than at the end, because once we have all the conditions meet what the underwriter requires, the clear to close comes really, really soon. And here's another thing for all you real estate agents. I'm always available. Even if you have a deal from another company, from another institution, just give me a call, 239-784-2048, or send me a text. It's better to have a lender friend that you can ask all type of questions. I'm always available. And what I do this, a lot of people ask me, my first property, I bought it in 2007 when the market crashed, 2008. And it was fine, and I was happy. And later on, I find out that I have a balloon loan because they told me it's 100% finance. You don't have to put money, and then I ended up like surprisingly have another loan that I didn't have no clue that exists. And then when I look into the papers, I sign it. And nobody explained me anything. This is not going to happen in this time with you. So I will go and explain every single number because you need to know what is going on in your loan and your purchase. This is not like buying a toy and you can return it later. This is the biggest investments of your life.
Yes, yes, it is. Yes, it is. And choosing your lender and your real estate agent is very important on the process. So it has to be a wise decision, and we are here to support you and guide you through that process. Thank you for joining this presentation. Here you can follow Malcolm. Here is his information, phone number 239-784-2048. His email, malcolm@maxwellmortgageloans.com. You can follow him on Instagram, Malcolm Gianella _mortgages. And I am here too. You can follow me. You can take a picture of this and follow me on Instagram as well. And also hear my Spotify podcast. I talk about real estate and what the changes on the market that we're having here in our area in South Florida. We're here to support you, to inform you, and to give you the best service. If you're in our area, we would love to work with you and help you achieve the goal of owning your home. So thank you so much for attending, and until next time.
Thank you,
Bye.
guys. Thank you, Claudia.
Thank you. See you next time. Bye.